How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance. If you are brand new to the channel, this channel is all about investing in my very own personal journey to amassing $100,000 with my Vanguard brokerage account. Now, what a week we had last week across indexes, all of which were rallying. We have not seen a rally of this sort for about 16 months now, so it's been a heck of a long time. But this type of momentum was only built because the Federal Reserve went ahead to make their first chess move in hiking those interest rates, delivering through on confidence to investors that the Federal Reserve is only going to continue to do whatever it takes to fight inflation. This news was very positive for investors across the board. My personal account took off, rising by $4,143.42, now bringing my account total to $88,193.49 on the day. Now, in terms of today's video, I want to get to it and talking about 5 high quality dividend stocks that, in my opinion, are all flying under the radar, given they're not the hottest or sexiest companies to necessarily invest in, but all of which are insanely lucrative.
I feel so alive! Cha-ching, cha-ching, cha-ching.
A video you will not want to miss out on. And before we dive in, tap on that thumbs up button and help me grow this channel. And of course, if you haven't already subscribed, make your way over to doing so. I'd like for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. So as always, just before we get into these 5 high quality dividend stocks, I want to talk just briefly about what exactly is going on in the market, because the Federal Reserve has just hiked the interest rates by only 0.25%. However, that sends a very strong message that the central bank is going to be focused on and committed to fighting inflation, while also remaining very confident that the economy as is strong enough to withstand higher interest rates.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the FOMC raised its policy interest rate by 1/4 percentage point. The economy is very strong, and against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we expect to begin reducing the size of our balance sheet at a coming meeting. Economic activity expanded at a robust 5.5% pace last year, reflecting progress on vaccinations and the reopening of the economy, fiscal and monetary policy support, and the healthy financial positions of households and businesses.
Very positive news for the investor, allowing us to see the light at the end of the tunnel. However, there will, in my opinion, still be near-term volatility, which is all going to be stemming from the war between Russia and Ukraine. Keep in mind, any opportunity you get to buy the dip is an opportunity that you should take advantage of. Now, in terms of today's video, like I mentioned, we're going to be talking about 5 high-quality dividend stocks, all of which are dividend aristocrats, meaning they've been paying out dividends for 25 plus consecutive years and increasing those dividends year over year. Now, the very first company I want to talk about that is flying under the radar is Dover Corporation, ticker symbol DOV. Now, Dover Corporation was founded all the way back in 1955. It's an American conglomerate manufacturer of industrial products, anything ranging from climate and sustainability technologies to pumps as well as imaging technology. And in my opinion, it's just a lesser known, under the radar type of investment opportunity. And over the years, Dover Corporation has consistently delivered through on strong performance. Going back just 5 years, we can see that their net revenue was up at $811 million in 2017, and then jumped all the way to $1.12 billion here in 2021. And despite all the mayhem over the last couple of years, they're hovering around a $22 billion market cap. And amidst the recent volatility, Dover Corporation fell by roughly 12%, falling all the way from $181 per share all the way down to around $159 per share. Now, this is a great opportunity to get invested into a company like Dover Corporation, especially as analysts only foresee its rebound in the coming months to years ahead of itself, coming back up to a median stock share price of $205 per share and a high stock share price of $221 per share. As of right now, Dover Corporation's PE ratio is hovering around 20.58, and of course that dividend of theirs is why we're here. It's coming in at a dividend yield of 1.31%. Moving right along to stock number 2, we have Illinois Toolworks, ticker symbol ITW. Illinois Toolworks is a global industrial company that is built around a differentiated business model, which ultimately means it has different segments. Now, 7 to be exact, ranging from automotive, construction products, food equipment, polymers and fluids, specialty products, and electronics, as well as welding. So talk about diversification in terms of various revenue streams. Illinois Toolworks certainly has you covered there with a history worth of growth since their founding in 1912. Now, in terms of their net income, we're talking about just going back 5 years to see they brought in a whopping $1.69 billion in 2017, and then went ahead to double it in 2021, coming all the way up to $2.69 billion, and a current market capitalization sitting at $66.44 billion, a current PE ratio at 24.94. It may certainly be a solid opportunity at this point in time to pick up shares worth of Illinois Toolworks, especially amidst all of this volatility where it fell by roughly 14%, coming down from $247 a share all the way down to $212 a share. But analysts only foresee its recovery coming back up to a median stock share price of $241 per share and a high stock share price upwards of $296 per share. But we are here for their dividend, coming in at a dividend yield of 2.34%. Now, as for our third stock opportunity on the day, it is one of the elders on the list. We are talking about A.O. Smith Corporation, ticker symbol AOS. A.O. Smith Corporation is a company that is a manufacturer and supplier of water heaters for both residential and commercial properties. It has over time become the largest of its kind within North America. Now, just as Dover Corporation as well as Illinois Toolworks, A.O. Smith has remained a consistent producer in terms of net revenue. Going back to 2017, we can see they brought in $296 million, and then doubled that in 2021, coming all the way up to $487 million. At this point in time, it's sitting with a market capitalization at $10.69 billion. But with the state of the market and all of the market conditions, A.O. Smith tumbled by nearly 20%, falling from around $85 per share all the way down to $68 per share. Their current PE ratio is sitting at 22.54. Now, looking into their future, analysts do foresee its comeback, coming back up to a median stock share price of $84 per share, a high stock share price sitting at $96 per share, and until it reaches those stock share prices, you're collecting on A.O. Smith's dividend with a current dividend yield at 1.69%. Jumping to our fourth stock opportunity of the day, we have PPG Industries, ticker symbol PPG. Now, PPG Industries is a global supplier of paints, coatings, and specialty materials that's currently operating out of 70 countries around the globe, which ultimately means that since its founding in 1883 has just done an outstanding job in terms of growth, and that's also evidenced within their net revenue over the past 5 years. Going back to 2017, we can see they brought in $1.59 billion, and now they're still bringing in roughly the same amount here in 2021 at $1.44 billion, with the current market capitalization at $30.92 billion and a PE ratio hovering around 22.07. PPG is another solid stock that you can get invested into amidst all of this volatility, especially as its stock fell by roughly 24%, falling from $174 all the way down to around $130 per share. Now, analysts don't foresee this thing too long, with their median stock share price coming back up to $175 per share, their high stock share price sitting at $200 per share, and until it reaches those share prices, we are collecting on PPG Industries dividend with their current dividend yield sitting at 1.91%. Now, last but certainly not least, we have our fifth dividend stock opportunity on the day. It is coming in from Air Products and Chemicals, ticker symbol APD. Now, Air Products and Chemicals, you can probably already guess, is a company that is dedicated to, well, gases and chemicals, selling to industrial businesses across the board. Its founding was back in 1940 and has since then only grown into a flourishing dominant industry leader with a market capitalization sitting at $51.37 billion and a nice track record worth of profitability. Going back to 2018, they brought in $1.5 billion, and then jumping over here into 2021, we could see it was upwards of $2.1 billion. And amidst all this volatility, Air Products and Chemicals has certainly been the hardest hit out of the bunch that we've mentioned today, falling by roughly 26%, coming down from $314 per share all the way down to $231 per share. This is creating a heck of an opportunity for all of us long-term value investors to scoop up shares of such a high-quality dividend company and just kick back and relax. Now, analysts do foresee its rebound coming back up to a median stock share price of $305 per share and a high stock share price at $355 per share. Now, that PE of theirs is hovering around 23.68, And of course, that dividend yield is what we're here for. It is coming in at a dividend yield of 2.7%. Now YouTube, that is it in terms of the 5 dividend aristocrats that I'm highly recommending you either add to your watch list or double down on this week, given they are either at fair or discounted stock share prices. If you liked what you heard, you learned something new, drop all those comments below. Let me know your thoughts on these 5 dividend aristocrats, or at least what you've been taking a look at and plan to invest on this week. Keep in mind, I am not a financial advisor, so always do your due diligence prior to making any investment decisions following my videos. But before we conclude, tap on that thumbs up button and help me grow this channel and get the word out there. And of course, if you haven't already subscribed, make your way over to doing so. I want for each and every one of you to be on this journey with me. Now YouTube, until the next video, I will see you all there.